Good afternoon, ladies and gentlemen, and welcome to the Vast Resources PLC Investor Update Q&A presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll, and if you would give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand over to Andrew Pralia, CEO from Vast Resources PLC. Good afternoon.
Good afternoon. Thank you very much for the introduction. Thank you, shareholders and potential shareholders, for joining us today. We'll just quickly run through a brief company overview of what direction the company has been taking over the last 12 months and looking forward for the next 12 months or so. And I'll just run through the company overview. First and foremost is, of course, everyone knows Vast. What we have been achieving over the last 12 months is the restart of base supply, which has been successful. We've seen rapid growth over the last 4 or 5 months, which has seen us getting into an increased production month on month, but we'll get to that as we go through the questions. Vast is predominantly based in Romania at the moment, with our base supply mine, which is operational and revenue generating. Looking forward to reopening Manaila in the not too distant future, and looking at other projects such as Blueberry. In Tajikistan, we have recently signed an agreement with Takob, which is a state-owned company by Talco, which is the largest company in Tajikistan that owns the government-owned smelter, and we will be assisting them in effectively bringing in the calcium fluoride, which is for the smelter itself, and then Vast, along with its joint venture partners, Mr. Abdul Jabbar Gargash and Ford Min here in Romania, will then be looking at extracting the metals, the non-ferrous metals, which are lead, zinc, gold and silver, and there have been indications of some PGMs as well. And we've recently signed an MOU to also explore the tailings dam, which has been neglected for the last 40 years, which still contains a lot of the non-ferrous metals. I'll go to the next slide. I've just gone through the targets of Baixa. We have a 608,000 tonne JORC. We are currently commencing the drilling to expand that JORC resource to firm up the old Near and Russian code, which had about 3.2 to 5.8 million tonnes. And that will be verified over the course of the next 12 months. And then we'll continue the drilling program to explore the other 8 skarn deposits within Baixa license area. And at the moment, we're only working on the single Antonia, and we'll be moving into Antonia North as well, with high grades of copper, lead, zinc, silver, gold, and molybdenum, and bismuth as well, which we'll get onto in the quick Q&A as well. Manaila, as most of you know, we put on care and maintenance in 2019, and the reasons for that we'll address in some of the questions that some of the shareholders supplied us. But we still believe on a base case scenario, it's got a $59 million NPV, which we costed out when copper was still at 7,800, and a looking forward statement of about $8,500 a tonne. So we still believe in Manaila, and now that we've finished our refinancing, we'll be focusing on that as well. The Takob mine, as I touched on a little bit earlier, the project is 100% financed. It will be in production in Q3 of this year. The engineers are working on site at the moment to get it operational, and we look forward to announcing to the market when we're ready to proceed with that as well. That is an agreement with, as I mentioned earlier, Takob mine, which is part of the Talco group, that works net effectively. It's a 12.25% royalty for Vast for all the work that we've put in so far, and the coordination. And as I said, that will be a near-term revenue for the company as well. Also the tailings, as I said, there's between 1 and 3.3 million tonnes, and that's only at the top level. It was a 40-year worth of tailings that where none of the non-ferrous minerals or metals have been extracted from. Our joint venture partner, Ford Min, who's an exploration expert here in Romania, are on site at the moment. They've done the initial sampling, and the full drilling will commence later on in this year as well. And that concludes the quick overview of the company. We thought that this format would be better if we went straight into the Q&A. There are quite a number of questions from shareholders, so I think we'll turn it over to
That's great.
the host. Thank you very much.
That's great, no problem. Just bring your cameras up into full view as well. Thank you very much indeed, Andrew. And of course, ladies and gentlemen, please do continue to submit your questions using the Q&A tab that's situated on the right-hand corner of your screen. But just while the company just take a few moments before we address those questions, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, will be accessed via your Investor Meet company dashboard. I'll refer to you both, if I may, having Andrew as the same names, so Andrew H and Andrew P. But obviously, as you guys know, you did receive a considerable number of questions ahead of today's event. And of course, I'll then perhaps direct you to look at that live Q&A as it comes in. But the first question that we received, perhaps if I may, to you, Andrew H. Do members of the board intend to purchase any additional shares from the market or take part in a future fundraise?
So we're currently deemed to be in a closed period, but really when this is not the case, several directors have expressed an interest to buy shares in the open market. None of the directors participated in the current in the last raise that we're looking for headroom approval.
Thank you very much indeed. Turning to you, Andrew P, if I may, does the board expect to see Bahia Ply make an operational profit this year, 2022, and Vast overall turn a profit in 22-23?
Look, as we've stated previously and through RNSs, it's been our intention to reach break even on the mine in the not too distant future as the new rigs are fully operational on site, which is planned for July. The first rig is on site, it's underground. The second rig is in transit and going through customs, and it should be on site midweek, but we'll RNS when that finally arrives. But we've indicated to the market that's already in progress. We've increased production on a month-on-month basis this entire year, and it's continuing to do so. And as we've mentioned, we're not providing any looking forward statements. However, the management's working forward to turning a profit for the year.
That's great, thank you. And if I may just stick with you, Andrew P, with the diamond concession being signed over 2 years ago, is it now time to let this part of the business go and move the focus more towards Romania and Tajikistan?
It's an interesting question. The company started out in Zimbabwe, and this particular asset was part of its inception. But I just need to reiterate that the company is completely focused on Romania and now Tajikistan. It should be noted that Zimbabwe is not distracting the management from these projects that are the fundamental core projects of the business at this point in time. But we still do believe in Zimbabwe and continuing to pursue that opportunity there. And if anything changes, we'll let the market know. But for the moment, we're not letting it go because we still believe in the asset and the opportunity for the company.
That's great. Thank you very much indeed. Andrew H, if I may, with the price of commodities continuing to rise, when will we see other Romanian assets such as Manila start contributing?
So I mean, our focus over the last it's been quite a few months of focus was to refinance out Atlas. As part of any new refinancing, really to finance Manila, the refinancing of Atlas has been a prerequisite to really moving that process forward. Now we've got a line drawn under Atlas, we can now continue our efforts to ramp up production at Bahia Ply, but it also gives us the chance to really continue discussions with financiers to look to bring Manila back into production. We are in as many believe, the start of a commodity super cycle, which is seeing very, very good pricing for copper, and that outlook is set to continue. So in terms of our plan for restart and the current copper price environment, Manila looks to be a commercially viable asset. So it's very much in our view to look to secure financing for that. But probably more crucially is that we secure financing that will not just bring it into initial production, but ultimately to fully fund the project, not just the mining out of the existing pit, but looking to get enough financing to put a plant at the pit and to fund the expansion into Kali Baba.
That's great, thank you. A brief question, but a good question. What's next for Vast? Maybe Andrew P, one for you.
Sure. Thank you. Well, most importantly, we'll continue focusing on developing Baitsa and expanding it, and that's the first and foremost for the company. That is our active mine, and it is revenue generating. And as I said earlier, it's increasing month on month. Tajikistan will be ready to start the phase 1 startup in the beginning of Q3 this year. As I mentioned earlier, our JV partners are working on the tailings dam, which we signed an MOU for recently. And as Andrew just mentioned, we're engaging with funders for Manaila, which we needed to wait till Atlas was removed, or the convertible equation was removed from the company. And also looking at progressing the Blueberry project that we've basically stepped back from while we were focusing on Baitsa and the refinancing. So that's the near term next for Vast question.
Thank you. And if I may just stick with you, Andrew P.
Sure.
As you've previously stated that the XRT sorter would not be required until mining output reached the point where the plant could not cope with the volume of ore, as we now have 2 Mantis drills very close to deployment, when will we need to introduce the sorter?
Well, the mine has a capacity of about 14,000 tonnes a month. It can be pushed to 16,000, but the haulage capacity of about 16,500. That's working 24/7. At this point, we've got 1 milling circuit fully functioning. The second milling circuit, as we announced recently, is in process of being commissioned, and it's part of what the general meeting headrooms for us to making sure that that's put into function very quickly. And those 2 lines, 1 and 2, are capable of producing 14,000 tonnes a month. Just let it be noted, the first Mantis rig that's arrived and is down on level 17 is initially will be used to extract the ore that we could not access due to the friable ground that was programmed for the first 9 months of production, which is what led to the change of the mining plans. Now that the Mantis rig is there, and we've got the remote control scoop that will be on site shortly, now we'll be able to access that ore and be able to extract level 17. And the second Mantis rig will be used for developing the decline into level 19, which will take up to another 6 months. So with those 2 areas, the current sub-level 3 on 18 and level 17 back, that will allow us to use the full first line in full capacity and get the second line up and running. And once that development work is completed and the second Mantis will be used for ore extraction, when we surpass that 14,000 tonnes a month, that's when the XRT will be required. So we're looking at probably Q2 next year before it's required, but we'll need to do some preparation beforehand.
That's great, thank you. Next 2 for you, Andrew H., if I may. The first one as follows. Whilst the final conversion by Atlas was another devastating blow for shareholders, it's provided the company with $800,000. How will you be putting this cash to use?
Sure. So, I mean, firstly, worth noting that the conversion was outside of our control. And really, as we had announced, we'd refinanced the entire balance owed to Atlas prior to the conversion being made. Ultimately, though, the company with this $800,000, we've made further commitments to Mercuria to reduce down their debt facility. So we made a commitment to reduce $1 million in July, which we will be using this cash to hold in reserve to ensure payments and reduction of debt will be made, in addition to maintaining a capital reserve, which I think is something which is important for any business, not less a mining company at the stage of Vast. So that is unfortunately something that's sort of come out of a bad situation, but gives us some benefit.
Thank you. And then I guess the follow on for you, Andrew, if I may, is there's been little mention of the Manila reopening recently. What are the current plans and or timescales?
So we're not going to talk about timescales. That's as Andrew said, we're not giving any forward-looking statements. But really, as we mentioned in Q4, the management's focus was on the refinancing of Atlas, which is now being complete. And as I said earlier to a previous question, that we're looking to now finance the restart of Manaila, and to ensure that we have a fully funded solution to bring Manaila into a steady state peak production.
That's great, thank you. Andrew P, maybe for you, what's the situation with Zimbabwe?
I mean, we can't really say much that's not already in the public domain, but what we can say that we still remain confident we'll be continuing in Zimbabwe. We still believe in the project. If there was any variation to what we've already announced, we'd be obliged to make an announcement. So we still believe that there is still a potential and opportunity for the company to go forward in Zimbabwe, and unless that changes, we'll continue on that path. And once and if anything does change, we will be RNSing that immediately because we're obliged to do so. So nothing's changed.
That's great, thank you. Andrew H, a bit long-winded question, but let me go through it for you. What is the basis for the below assumptions set in the chairman's letter dated the 25th of May? For this purpose, the company had assumed that the share price at the time of exercise of this option would be not less than 2.78 pence, which after applying the 10% discount contained in the option agreement would equate to the grant of authorities to issue approximately 130 million shares. Perhaps you could just expand on that.
Before directly answering it, probably worth adding that there has been some suggestion by shareholders on bulletin boards that this equity option is like a convertible loan. This option is completely separate to the existing debt owed to Mercuria and is not linked to the settlement of the debt owed to Mercuria. Their interest in taking the option is really on the basis that they've been a long-term supporter of the company. They've been in the balance sheet since March 2018. They supported Atlas when they came into the structure, and they supported us in variation to the intercreditor agreement to take Atlas out because of what that convertible was doing to the business. And ultimately, they want to really be able to participate from an equity perspective in the future growth of the company, which I think really demonstrates the relationship that we have with them, but also the outlook that they have on Vast. And really, if they were to take up the option, which is entirely at their discretion, that would really be the start of institutional grade cornerstone investment, which is something that I initially came on to focus back in 2000, the end of 2018. So in terms of the assumptions as to how we get to we got to the figure of authority to issue the shares, we established that by taking into account the total amount of the option, as well as the control mechanism to not exceed 20% ownership of the company, in addition to the assumption that Mercuria participating, which again is entirely at their option, but they they don't come in. Their intention is not to come in with in small quantities. So really, the company needs to meet a minimum valuation and be at a certain size. And so really, on the basis of reaching a certain valuation, that will be on the basis of certain delivery targets being reached from existing operations, which is ultimately you get to the price of around 2.78. That would ultimately be a fair assumption to absorb that kind of investment for the company to be at a certain stage in its growth.
That's great, thank you. Andrew P, maybe one for you. What message of reassurance can the board give to long-term shareholders who are unlikely to ever recover their investments as they stand, as a backdrop of about 8 3/4 pence per share last year?
Well, I don't think that they're unlikely to recover their investments. I think the reality is the current share price doesn't represent the valuation of the company's assets or its operation. This is based on independent valuations. And now that the convertible's been eliminated and the Bates mine continues on its growth path, the new projects start to generate revenue for the company, we do strongly believe the market will correct itself and reflect the true value of the business. I mean, last year we had an independent report that put a valuation when copper prices were far lower than they are now at about 139 million for Baitsa as it was. We have another study of evaluation of Manaila being worth upwards of 59 million based on a base case model, also on lower commodities prices. There are also the opportunities that we're pursuing in Tajikistan and potentially Zimbabwe. So I think going back to that price level is well, we strongly believe. I mean, people have asked why we haven't participated, but I've been invested in the company since 2012, and again in 2015. Significant sums at the equivalent of £1.44 today. So the number of shares has reflected the value of the investment that a lot of the directors have already put into the company. So we strongly believe and truly believe in the company's growth, and that it won't be too long, we hope, before the market corrects itself and reflects the true valuation of the company.
That's great. Thank you very much indeed. And just to say, I think some of the pre-submitted questions, I think some people are sending in the same questions that they may have pre-submitted, but the company has committed to answering all of those that were pre-submitted, and we're about halfway through at this point. So Andrew P., if I may stick with you, Moronje has been ongoing for several years with no tangible progress in the public domain. When does this conclude, for better or for worse?
We answered quite a bit of that, I think, on the question 9. The company still believes in the Zimbabwe opportunity. We're still in constant dialogue with the authorities there. And once it's for the better or for the worse, we will have to provide the market with updates. But we don't have any clear definitive answers on timing. And once we have those, we'll update the market. But the company has decided it's not in the best interest of the shareholders or the company itself to cut ties. We still strongly believe that something will transpire in country.
Thank you. And for you again, Andrew, if I may, what's happening with the Zimbabwe diamond deal? It was anticipated that the deal would be signed in October of 2019 and then by the end of March 2020, but nothing has happened for some time. Deals have been signed with Alrosa and Anjin, but not Vast. Media reports suggest that the deal with Vast has now been shelved. Would it be better for Vast to pull out of Zimbabwe altogether and concentrate its efforts elsewhere? I know you may have touched on that, but
I'd like to put this into context because there are a lot of rumour and speculation, again, on the bulletin boards. First and foremost, in October 2019, it was the ministry and the minister himself that called the press conference to announce that Vast would be participating. Not Vast. We had to, under AIM rules, we had to make comment to that, which we did. And everything we've announced to date has been backed up by documentary evidence, as checked by the Nomad and the other authorities, and nothing has changed. As far as Alrosa and Anjin, you're talking about Alrosa being a Russian government-owned entity and Anjin being the Chinese state entity. They have different relationships with the country than we do as a private investor and as a public company. We are not in a position at this stage to pull out. We still, as I said, strongly believe in Zimbabwe and the potential there. And if anything does transpire positive or negative, we will update the market. But at this moment, it's status quo, and we still believe that something will happen.
That's great. Andrew H., if I may turn to you, how does the company propose to pay off the debt owed to Alfred and Mercuria? How many more placings is the company planning for 22 and 23?
So in terms of looking at any refinancing, the repayment of those facilities was evaluated by the incoming lenders, looking at our business plan and cash flow generation. There are really other options available to the company. As we said before, that a prerequisite was the removal of Atlas from the structure. Really more and more with sort of PLC driven funding, even if asset values on a discounted cash flow basis look solid, market cap is really taken seriously into account. And really, where the share price movement was certainly something that incoming debt financiers could not ignore. So that was really the most important thing for us to get rid of. Now that the Atlas debt has been cleared, we believe we're in a position to refinance the existing debt owed to Alpha Credit, also Alpha, and also Mercuria within the loan periods. You have currently a much better backdrop in terms of fundamentals of the business, particularly if you look along the lines of scenarios of offtake driven finance, where we are in the bites, has really come a long way. Save for delays, we are in a position where we have the mechanization process underway. The first mantis underground. This is a genuinely exciting turning point for Baita, and that really does and should translate into more interest from off-takers where there is demand for copper, given where copper prices sit. We are in a very interesting place, and also taking into account what was said about Manaila, and I think this could be an interesting year for the company.
Thank you. I guess next question, there are a number of questions relating to the same topic in the live chat, so hopefully we can address all of those kind of simultaneously, but maybe one for you, Andrew P. Many shareholders who have been long-term supporters of Vast have now lost more than 90% of their initial investment due to repeated placings and Atlas conversions. Shareholder confidence in the board has been significantly damaged over the last 2 years. So what's the company doing to try and restore confidence and shareholder value?
On the live quick Q&A, there's a lot of the same question coming through in different forms. We're very much aware of the dilution experienced by our long-term shareholders in particular. And as a board of directors, I know myself and one or two others have invested very heavily in the company, combined more than the market cap alone today, significantly. So we are also invested in line with our long-term shareholders, and we do understand and sympathise. But the company is now in a far healthier position than it's ever been. We have cash in the bank, or we'll have a reserve of cash in the bank. There's no longer a threat of conversion, which is extremely important. We have revenue generating mine with a second revenue stream coming on board in Q2. Baita Mine now has the equipment it needs to meet the targets, and we have a solid pipeline of opportunities to grow the company. So hopefully the market will recognise this, and it will re-establish itself, and it will be the market cap will continue to rise. And as we said earlier, we're not anticipating any further dilution to shareholders. We believe that we're quite comfortable at the moment in the cash reserve. We've got the revenue generation from 2 sources, and we're looking at financing new projects going forward, similar to the way we've done in Tajikistan.
Thank you, Andrew. And if I may stay with you for the next 2 questions, if I may. The first one is, what is actually happening regarding the Moranje community project and Vault Diamonds?
I think we answered that in, the question number 12. So I really don't want to go over that again. But, we're not at liberty to announce until we get official notification from the authorities in Zimbabwe. But as I can say, we are still positive that we will continue working in Zimbabwe, and that it's been a long wait. But as I say, all good things come to those who wait. Unfortunately, it's been a long and drawn out process, but really will be worthwhile for the company, we believe.
Thank you. And if I stay with you, Andrew, what is the cause of both Plan 1 and 2's failure, and how long realistically until we reach the target of 14 KTPM?
Well, I mean, we've detailed these reasons at length in several RNSs as these things transpired. But in simple terms, during the period where it was closed down, the mine was left relatively unkept for far too long. There was, even though we were dewatering it, there was still natural water ingress from above, because it is a mine sitting on top, underneath the forest, and water seeps through. If the predominant rock is a limestone host and dolomite, which absorbs the water. And this ingress from the elements softened the rocks in the support area that weren't visible in level 17, where we had all the data, which is where Craig planned the mine plan for level 17. And when we started blasting, it became softer and softer. We opened up new areas within the same area. This was all announced back, I think, in March last year, and again in August or October last year. And no matter what we did, it became too unsafe. So the ore body is there. There is still high-grade ore there, which is the reason why the first Mantis was deployed, or is being deployed, in level 17 with a remote control scoop to make sure there's safe working conditions. But even though it put us behind the mine plan by 12 to 18 months, We hoped to catch up as fast as possible, but we weren't going to put lives at risk. And that is the reason for both Mine Plan 1 and 2 not reaching the target, is purely because geology is unpredictable. You can only get so much from the drilling, but once you're on the ground and you are blasting soft rock underground, you can't risk lives. But the company did pivot, and effectively what it had to do is, over the past 12 months, has managed to do what is not normal in mining. Normally you go in, you pre-develop all of your areas, then you start to mining. What we've done is we've been developing the lower areas of the mine. We've developed level 18, sub-level 1, sub-level 2. We're now in sub-level 3. The second Mantis rig will start to develop the decline down to 19. We're changing the method of mining with long hole stoping, which will improve productivity and increase production. We've basically done things a little bit backwards due to necessity, to manage. Otherwise, what most mining companies would have done with a large cash surplus, or would have gone in, shut it, rebuilt it, redeveloped it, and gone back in. We've managed to keep the mine open. We've still managed to maintain a revenue stream, and as I said, month on month, we've been increasing that revenue. We do believe that in July we'll have some significant results to post to the market, and that will continue all the way through to the end of Q1 next year. But as I said, we're recovering that ore in level 17. That will start in end of this month, beginning of next month, and basically we'll be catching up that 18 months or 12 to 18 months worth of lost plan out of Mine Plan 1 and 2. But we remain confident on the current mining plan and look forward to reporting that on a quarterly basis as we increase production.
That's great, thank you. Andrew H., maybe this one is for you. When shareholders questioned the newly formed company, which turned out to be part of vast Tajikistan's project, why did the company say it was immaterial to the running of the business and therefore did not need to be RNS'd? It clearly was, as it kept the lights on, why Bahia Ply failed to hit its targets.
So the company was formed prior to the signing of the joint venture contracts, and ultimately there was nothing material until the transaction was concluded, which we then announced the details of the transaction in the RNS released on the 3rd of May. Revenue generation to that point really was on a consultancy basis and not relevant to the new co being formed at that time, and the revenue was reported in our Q1 results in line with our quarterly reporting, and that really is the reason around the chain of events.
Thank you very much indeed. If I may stick with you for the next question, how much money was spent on Gahagu?
I'm not at liberty to give exact figures. That will obviously comes in line with accounts reporting, but I can say the amount was minimal. The company retracted itself before any significant money was going to be required as part of that acquisition.
Thank you very much indeed. Again, maybe one for you, Andrew H. What happened to the fencing and security on the original Moranje diamond plot, which I believe we raised about 1 million for?
Around the dollar figure. Really, the focus on fencing has been something that's been very much generated out of the grapevine. The money raised was for already incurred costs in Zimbabwe, as well as anticipated costs linked to the commencement of the project in Zimbabwe. The delays that we've faced has meant that we've utilised the funding against continuing associated costs in line with our efforts in the country, which really go back to the point of the answers that Andrew has given in this Q&A on Zimbabwe.
Thank you. Just got 3 more questions, if I may. The first one is as follows, maybe for you, Andrew H. If we've managed to get debt finance, why are we getting shareholders to pay off Atlas? Headroom for this has been used several times. I believe this will be the 3rd time we've had to agree headroom to cover Atlas.
So the headroom for the Atlas facility was authorised once by shareholders at the general meeting on the 8th of November 2019. The Atlas convertible bond and the Atlas debt was settled by the debt facility arranged by Alpha Credit in Geneva. The headroom that's being requested at the upcoming general meeting on Friday, on the 10th of June, is linked to a raise that was done to cover additional payments to Mercuria, around obviously the agreement we had to come to with them with respect to the variation of the intercreditor agreement, as well as funds required to further develop BITA. So the Atlas debt was settled with debt.
Thank you. I might combine question 22 and 23. I think they've got the same theme between them, and maybe Andrew H, you can start, and Andrew P, throw in as and when you feel. But bearing in mind that the company has failed to protect its shareholders from continuous dilution and reduction in share price, do the board still think the team are well placed to drive the company to profit? Given that long-term investors have seen the value of their investments diluted by over 95%, what assurances will you give that no further dilution will happen? And can you clarify as to what value investors have received from the current board over the last few years? Now, there's a lot in there, but perhaps Andrew H, I could start with you, and Andrew P, do join in.
Yeah, so I mean, it goes back to some of the answers we've given before in terms of the fact that we absolutely recognise the dilution, that pain has been felt by the directors, despite the setbacks and delays. The company, under the guidance of the current board, did bring BITA into production against the backdrop of COVID-19 and lockdown in 2020. The Atlas convertible bond was a necessary facility at the time. Back when we signed documentation in October 2019, that was a combined funding package for both Romania and Zimbabwe. That was the reason why we drew and decided to go down the route of convertible. Andrew highlighted the timings around and our belief around the timings of commencement of the project in Zimbabwe. If we'd have known what was going to happen in terms of timing, we would not have taken a convertible option for BITA alone to bear. But at the time, and what the company was basing its decisions on, which I think the share price also certainly believed certainly believed in what was going on. That was the route we went, and it was ultimately a facility that enabled the company to bring BITA into production. But the slower than planned production levels at BITA meant a slower refinancing of Atlas. However, the company has now drawn a line under the convertible debt. We can now focus on achieving a much fairer valuation based on our assets, our asset pipeline, instead of a share price driven by negative sentiment, due to the presence of a very dilutive debt structure. In Romania, we're a copper-driven producer with a producing asset, with other development assets in place. I've said it before. Vast in terms of its size is, as a name-listed company, we have a pipeline of assets to develop. A lot of mining companies at a similar price point to us, one asset-driven companies. We already have a producing asset, and we have other copper-driven assets in Romania. So there's a lot of value that should be attributed to that, which is currently not, and it's now our focus to really look to restore the value of our portfolio into the share price. And we're going to be doing that at the start of, as I said, is that many deem to be at the start of a commodity super cycle. So that really does put us in a very interesting space. Not least just the Romania business, and now we have this very strategic relationship in Tajikistan, which has really driven revenue very, very quickly. And the way that relationship's been developed by Andrew, that there's a lot of exciting ways that sort of avenue can develop. and then Zimbabwe remains an ongoing element to the business.
Yeah, and I'll just add that, as Andrew just mentioned, what's really not reflected in the share price at all is the value that's been added to the company over the course of the last 3-4 years. The assets themselves, the investment into the operations, and put into perspective that, at the end of 2017, the company was sitting on $40 million worth of debts on its book. It had no operations that were actually generating cash positively to the business, and we had absolutely zero access to the revenues that were being generated that could have been coming into the company, which is why we divested of our gold assets in Zimbabwe at the time, holding 40 million of debt. And in Manaila, we were basically mining for the sake of mining rather than conserving the asset to be able to be profitable, which is what we're doing. What we've done now, and what we plan on doing on reopening, is reopening it as a profit centre rather than just a break even for the sake of mining. And not above and beyond that, now we own all of our assets 100% across the board. We were a majority shareholder in Manaila. We own that 100%. The company was a majority shareholder in Baita. It now owns that 100%. That bought at a heavy discount, the remaining. We preserved the resource into Manaila, as I said, and Kalibaba. When we open it up, we want to do it properly funded. What we're doing right now is we've now done projects like Tajikistan, where we'll be getting a 12.25% royalty from revenue. So effectively, the company is now revenue generating. We are looking forward to having a positive cash flow in the coming quarters. And now the company sits at 1/20th of the debt it had in 2018. So we've gone from 40 million down to about just after we pay off this next $1 million to Mercuria, and the other 1.5 million in total, we'll be sitting at under $8 million worth of debt for what should be independently valued and NPVs of in excess of 200 million. So what's been invested in the company and what the company is doing now compared to its market cap, there's a disproportion, and now it's our job as a management team and a board is to restore that valuation in the marketplace so the share price reflects what's actually been invested in the work that's been done.
That's great. Well, Andrew, thank you very much for that. That's you've taken care of all the pre-submitted questions. So firstly, thank you to all those investors that took time to submit questions ahead of today's event. Andrews, if I could ask you both to open up the Q&A tab. It's on the right-hand side of the screen. There are a lot of questions in here that I think you have touched on, certainly covering themes with those 23 questions that you've just taken on. But perhaps if I may just ask you to take a look through those, if there's anything else that you would like to add. Of course, what we can do is make all these questions available to you post the meeting as well. So over to you.
There are some very valid questions. One of them reads like War and Peace, and we'll address that question because it's quite detailed and will be quite informative to the shareholders. I think most of the others have already been answered in the Q&A. Those who have not been answered in the Q&A that are either not offensive or libelous, we will address and respond to the market with the Q&A questions in written form in the coming days. I think we've passed our time now. So we will address all the questions of relevance, as I said, that are not
That's great.
that need to be answered, definitely.
Perfect. Well, thank you. Well, look, Andrew, I know that to both of you that investor feedback is important to the company. I'll shortly redirect investors to provide you with their thoughts and expectations. But before doing so, I just wondered if I could just ask you just for a few closing comments, just to wrap up with. And as I say, I'll redirect those on the call to give you their feedback.
Andrew, do you mind if I start? I think what's happened over the course of the last 18 months is rather unfortunate, including the latest round of conversions that in the end were beyond our control. We had prepared to pay everything out in full. However, what has been achieved is we've managed to keep Baita open during a very difficult period. We still claim and we still believe that Baita is completely undervalued, and we will be unlocking that value with the exploration drilling program that is commencing in the next few days. They're on site. With the increase in production that has been happening month on month, we do believe that the future reports should make shareholders more confident in the asset itself. The opportunities in Romania, Tajikistan, and in Zimbabwe are there. We will be addressing all of them. We are doing them at a pace that will not be stressful to the company. We'll be doing it out of cash flow or out of debt from here on in. That is the plan of the management of the board. And we do not plan on going back to the market in the near future, and we certainly don't plan to go back to any sort of convertible debt. So I think now we hope to see the reflection in the share price that matches the work that's gone into the company. We appreciate the shareholder support to date, and we look forward to growing together.
And probably to add that, I mean, save for the pain of our long-term shareholders, where we sit now as a price point, really does reflect an interesting entry point. I mean, as I said earlier, just focusing on the Romania business, copper is very much as a key element to energy transition, to electrification of transportation, and many other things as part of the energy transition process. And this is part of the dynamic that really produces the copper price that we're experiencing today. Baitsa is a producing copper asset. Manaila has a defined resource, another copper-driven asset, and that is something that is not reflected in our current share price.
That's great. To both the Andrews, thank you very much indeed for updating investors this afternoon. Can I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This may take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Vast Resources PLC, we'd like to thank you for attending today's presentation. That now concludes today's session. May I wish you all a very pleasant afternoon.